All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers here with Insurance Agency Marketing Services. I want to thank you for taking time to join us here this morning for our single premium life webinar. I will tell you here right up front, this is recorded for you. So once we're done here, I will email the recording over to you. Of course, if you have any questions, I certainly encourage you to type those in the question box and I will address those as we move along. So one of the things here real quick this morning, I'll tell you, every Friday morning we do a single premium life webinar. This one here is a new one. I will apologize up front that the invitation is off a little bit to what we're actually going to be speaking about here this morning. So I will apologize for that, but I will not apologize for this. The content is, this is a very short webinar this morning, which is good. It's a great little sales idea I'm pretty excited about. This is something that we've seen over the years. And this particular concept is something that you can put into place as soon as we get off the phone here this morning. One of the things I'll tell you real quick about us is we've been in the business now 31 years working with independent life and annuity advisors. And something that we started with 31 years ago was selling annuities. We added life to the portfolio of products probably about midway through in the last 31 years. And something that we've seen is a very popular, something that continues to be a big part of our business is single premium life. That's why we dedicate Fridays to that, because it is such a big part of our business. So real quick, what I'm going to do, I understand time is very valuable, time is money, and I'm going to go through some things that we can do for you, that we will do for you, that set us apart. And so I appreciate you hanging with me here, because you might learn something that you didn't know before. You'll find out that there's some things that we do that's unique to this industry, unique for IMOs. So something we do right out of the gate here is we will pay you for your referrals. And this is how we do that. So just like you like referrals, we do too. We will send you a check for $50 whenever you send us a referral that contracts with us. Every single time they write a piece of business, we are going to put money into an account, and each quarter we'll send you a check. So for example, if you send us 3 agents that in 1 year's time they do $1 million worth of single premium life annuities. Now we track our traditional life, target life premium a little bit different. We're going to send you a check for $6,000. Now we have agents that are collecting in excess of $10,000, $15,000 just based on their referral. As long as they're right in business, you're going to get paid. Now it's transparent to them. They're never going to know, so to speak, what your checks are. They may know that they're being referred, and then they'll start sending us referrals. So the great thing is that you're not in the commission business, you're not taking a haircut, and neither is your agent. And so we certainly love those referrals. If you think of anybody, you can call and just let me know who they are. I'll get them contracted and send you a check. Then one thing we do for you, as well as your referral, is our market reimbursement. This is something I really like, and I try to encourage our agents and advisors to take advantage of this. But if you write $100,000 in single premium life, we're going to put $200 in a market reimbursement account for you. That also includes the annuity business, same dollar for dollar. Target life is a little bit different. So what happens is, let's say that you decide you wanted to do it's kind of late, but maybe a back to school or maybe a summer customer appreciation. A lot of our agents do a holiday party around Christmas time. Let's say you spend $1,000, and that's pretty low, but let's say you spend $1,000. You send us a receipt. We're going to turn around and send you a check for $500. We also have agents that will use this for their seminars, to buy their lead programs, whatever it be. You send us a receipt. We're going to send you a check for 50% of that. So that's kind of nice, because your expenses are now cut in half. So keep that in mind when you move forward with us. You get contracted. Maybe I see there's some of our producers that are on here now. Don't forget to take advantage of that. Speaking of new producers, so if you're brand new to us, you complete the contracting, what we're going to do is we're going to give you an option to choose any one of the 3 tiers of new producer bonus. So for example, you write your first case, $100,000 in premium. Maybe it's 2 cases for $100,000. We're going to send you a check for $750 in cash if you choose to take that route. Or you could take advantage of the 2-year producer website. So we'll set you up a website, have it up and running 1 business day. Or you could buy that, of course, if you don't want to just earn it. Or maybe you decide you want to take advantage of the iPad. That's really nice. I know a lot of advisors use those today. You might decide, hey, I'm going to wait to get to 300,000 level. At that point, you can choose the Social Security program and the 3,000 piece postcard mailing. That's really neat. A lot of our advisors take advantage of that because it gets you in front of more seniors, which then helps you to sell more life, more annuities, etc. So that's a great program. That's something you can buy into. You can ask for anyone in our annuity department for that. If you like, you might wait till you get to the $2,000 market reimbursement. Again, kind of like our market reimbursement program. As you produce, you get more. We're going to drop $2,000 into an account for you right away. Or you might just choose to take the $1,500 gift card. You might want to wait to the last level. This is kind of neat. This is a way for you to get more into the seminar selling. We've got 2 advisors of ours here that qualify for all of our trips. They're actually going to be in our upcoming Life Annuity Training Academy, which I'll talk about here in a minute. So you have the option to do 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pimper. These guys are great at what they do. And if you want to maybe just buy into it, learn a little bit more about the program, give us a call. We'll tell you how that works. Or you might just want to wait till you set up a time to do your own Ritz-Carlton travel rewards. Just do something like that. So that's kind of, we have agents that do that as well. So our back office support, we basically take you from start to finish, from submission to commission. When you write a piece of business with us, we provide you everything that you need to do. And we're going to go through some of those things real quick here in a minute. But you write a case, you call us up, for example. We're going to run the illustration for you, so we'll do that case design for you, provide you the forms, you write it up, you send it back to us, we scrub it, make sure everything's there, all the forms, all the boxes are checked, all the signatures are there, send it to the company the same day. So we basically take you from start to finish. Our paperless contracting is real nice as well, so if you want to get contracted, which we certainly hope that you would, you can submit a contract which you can be appointed with all of our carriers at one time. You don't have to worry about filling out a contract for every company. It's very simple, it's very efficient, and certainly encourage you to look at that. Okay, our creative marketing. This department has done such great stuff for so many of our advisors. We can take you from A to Z, anywhere from, you can see here, our turnkey solutions, ready to print, customizable information. They've got some very professional brochures that we can customize for you. You might have an idea that you want something developed. They are great at this. So maybe you've got an idea you want special for you. We can set that up. Also, customizable branding materials. A lot of agents have come to us and we've created a logo for them. So now they have that on every single thing that they send out to their clients and their prospects. I would encourage you to consider that as well. And then lastly, digital solutions. I see a lot of stuff. I'm on Facebook. I don't really post anything, but I certainly like to see what's out there. I see a lot of advisors are putting things on Facebook, and it does help. It's just another way to get out there. We also have different email campaigns you can take advantage of. So keep that in mind. You'll see that Josh's name is on the webinar. My name is Mark Raymakers. He's the one that set up the webinar for us here this morning. So you can certainly call and ask for him or anyone in that department. Our website, if you haven't been there, I encourage you to go there. It's www.imsinc.com. You're going to see every single thing out there that you could possibly hope for or want for as far as doing business, whether it be from getting contracted to running quotes for life, annuities, anything that we have out there. That we also even have a part that's designated specifically for single premium life. And I've been working on a series of videos out there. You'll start to see those in there as well. It's called our Single Premium Life University. We have all these little short 3 to 5 minute different videos that we're working on, which are going to give you different ideas, concepts, prospecting. Even something that I worked on last week is even appointments. I used to be a producer in the field myself, and so I use some of my experience and just some short little clips on some things you might want to say to your prospects and your clients. Now, a lot of you are probably wondering, how can I be a better advisor as far as asking the right questions, doing a better job of helping my clients to plan for retirement? We have the Retirement Analyzer. Great program. This is not for those of you that can't figure out how to turn off the computer. We had a guy the other day said, I just unplug it when I'm done. So this is a little bit more advanced in that. You can see there's graphs and charts, and it really in the end tells your clients whether or not they can retire at the age that they want to based on their spending habits, based on what they've set aside. So I encourage you to take a look at that. You can call and ask for anyone in the annuity department. They can help you with that. Okay, all this Department of Labor stuff has come out. Created kind of a whirlwind for our industry. And with that said, what we've done is we've created our IMS Wealth Management. This is a sister company here, so we are our own RIA. You can see here, just from the increased revenue standpoint, be able to help your clients when you're seeing prospects, to be able to help them in a different avenue of planning. And so anything that you want to do here, we can help you with that. And what I'm going to do here real quick is we've got a couple of different polls I want to put out. So just real quick, I want you to mark yes if you are interested in maybe speaking with somebody on that side. Maybe you haven't gotten your Series 65. If you're going to be selling qualified accounts, you're going to have to do something. If you don't have that already, we'll reimburse you for the cost of taking the test. But not only that, I think what's important is one thing that I've learned. I had my property and casualty license, and I learned the more lines of business, the more areas I could help my clients plan, the better my retention was. I had a 95% persistency based on the block of clients that I had written, and I had written in excess of 200 clients a year. So I really accumulated a lot, and one of the ways I did that was being multifaceted, be able to offer a lot of things. I sold securities to my clients. So really it strengthens the relationships. And if you want to know about what we can do for you, I will tell you that our fees are right in line with everybody else. In fact, I haven't heard that we're getting beat. I haven't heard that we're getting beat on the commission schedules either. So if you want to know more, what I'll do is I'll have one of our gentlemen from the IAMS Wealth Management team give you a call and discuss the fees, discuss the commissions, discuss what we can do for you. So, okay, great response so far. I'm going to give you just another minute here to go ahead and vote in. But over half of you have voted in here on this, and this is great. This is a great way to be a better advisor, I think, to offer so much more to your clients. Because one of the things I've seen too is that if they've got an advisor that they're working with that has, maybe more tools in their bag, as they say, there is the opportunity, or maybe the unfortunate chance that you might lose that client because somebody else out there's got more tools in the bag to help them. Okay. I'm going to go ahead and close this out here. Nearly 70% of you have responded. I appreciate that. And I know the guys over in the IAMS Wealth Management team will as well. Okay, closing this poll here. Thank you very much. And if you decide that you want to know more, just if you hadn't weighed in, just go ahead and give us a call. We'll get you set up. One last poll here for you. We have what we call our Life and Annuity Training Academy. And I'm going to put this up, and I'm just going to give you an opportunity to vote in on this, and we're going to go ahead and jump right into what the webinar is about here this morning. So what we do is we fly you in on a Wednesday. So IAMS is going to pay for your airfare. We pay for your trip out here, obviously your trip back. We pay for your meals. We pay for your lodging. And this is we'll say it's a 3-day event, but realistically, you're getting about 2 days worth of training. So we fly you in on a Wednesday. You'll get out here. We'll do a few short presentations. We'll feed you. We'll have some beverages, and then we'll put you to bed. So then the next morning on Thursday, we get up. We do a full day of training. We do a half a day training on Friday, so we send you back home. We'll probably get done around 12:30, 1 o'clock maybe, and get you back home. And what we do is we bring speakers and presenters in from across the country to talk about ways to help you. And this is, again, ways to help you, not talk about products. We're not going to sit and talk about products the whole time. What we want to do is we want to teach you ways to increase your life production or increase your annuity production. So basically, what we see is help you to do better at what you're doing now, bring you some new sales concepts and ideas, and to help you to maybe incorporate more things into it. I know there's a lot of annuity advisors that come out here, and we talk about some life concepts. So what happens is we see a lot of them start to sell life insurance, and we do talk about single premium life. So this is an opportunity for you to grow your business in that respect. Now, you're probably wondering, when are we doing it? We've got one coming up here in September. That one, I believe, is almost full. So there's an opportunity. That's the first week of September. And then we have one coming up in November. That's the first week of November. Those are the last events that we have scheduled for this year. So if you are interested at all in knowing what we're going to cover, maybe get you an agenda, maybe interested in attending the event, all you have to do is mark yes. So what we're going to do then is we will email the agenda and an application so you know exactly what's coming. We'll also discuss the dates with you. So just by marking yes, what you're going to do is you're going to get a phone call from us, and you get an email with all of the details. That doesn't mean you have to attend it, but we generally do 3 to 4 of these a year. Again, we cover all of your expenses. And here's the other nice thing about that I like. with these particular events, keep in mind you're going to be sitting in a room with 30 to 40 other top advisors. Now we get a lot of response. We have hundreds of agents that want to come to this, keep in mind. So we narrow it down. We want agents that are advisors that are full-time in the business, and you're going to get a chance to visit with them. There's plenty of time to share different marketing ideas and sales strategies. And I've seen some of the best sales and marketing ideas ever I've gotten this business in '88, but I've seen some really great stuff here. So I'm only seeing 56% of you have marked yes or no on this. So just keep in mind, there is no cost to you other than your time out of the office. And one of the things that I've seen is our top producers are the ones that attend these events because they're constantly looking for new ways to, I guess, reinvent themselves to help them to grow their business. We do talk about some new products out there, but it's also an opportunity to meet with our folks here from IAMS Wealth Management. A lot of good stuff going on, and you're going to learn a lot of different sales techniques and ideas. Okay, much better response. I appreciate that. Okay, so if you change your mind and you want to know more about the Life Annuity Training Academy, just give us a call here. Okay, let's get on to the meat of the webinar here. This is why you're here this morning. And okay, I'm closing the poll. All right, one last thing here. We've got our top producers. This is something that we do here every year. We have an 18-month basically, we got to be careful now with the DOL, but we used to base this solely on production, but now it's going to be based on something along those lines as well. And this is our 2018 Marketing Summit. This is February 25th through the 28th. This is in Scottsdale, Arizona, and this is a 4-day, 3-night, and you'll see that it is the Boulders Resort Spa, beautiful location, and this is for producer and guests. So certainly would encourage you to keep that in mind. Would love to have you to this event. Give us a chance to get to know you a little bit better. Reward you for your hard work. Okay, so let's go ahead. Let's get started here with what we've set up for you here as far as our webinar on what I refer to as annuity hybridization. I don't even know if that is actually a word or not, but I thought, hey, let's that's really what we're doing this morning. We're talking about a way, if you're out selling annuities today, and this is, I will tell you that a very large majority of our premiums, so the vast majority that comes into single premium life, is coming from annuities, whether it be qualified or non-qualified. Of course, we see money coming from CDs. We see money coming from single premium or life policies now, some old ones that were purchased years and years ago, or even just traditional life. And so hang with me here. This is a neat little way for you to make the most of your appointments out there, make the most of your annuity sales, because a lot of times what we see is agents will write an annuity when a client inherits money, or it's the easiest thing to do. So here's what we're going to talk about real quick, and I'm going to remind you this is going to go pretty quick here. So if you do have any questions, just go ahead and type in the box. We're going to talk about the standard annuity sale. We're going to talk real quickly about hybridization, a multi-dimensional sale, to kind of help you think outside the box and ask a few extra questions. And then we're going to talk about the benefits of what I refer to as hybridization. We're going to talk about why this is so popular too, because we are seeing a ton of business coming in from this way. We're also going to talk about underwriting. So that's kind of important. Obviously, when you sell annuities, there's not underwriting, but what we're going to talk about here on the single premium side is what's all involved. We're going to talk about why single premium life, why we want to look at that, and then what you're looking for, who's a prospect. And again, we're going to go through this pretty quickly, but finding a prospect is probably a lot easier than you think. So here's an example. Here's what we see on a daily basis. So you've got a client. Maybe it's an existing client, maybe it's a prospect, it's a referral, somebody that you just met. That is, in this scenario, we're going to use a 65 female. She inherits $100,000 from her deceased spouse or a family member. We see quite a bit of this. And what happens is, the benefits of putting this money into an annuity is that you've got tax deferred growth, right? That money's going to sit there, it's going to grow. It's going to get you better returns than what you're going to see in a bank account, right? The one thing that we see is these particular plans, an annuity typically does not have any type of a long-term care or any type of a home health care benefit. Now, we do have annuity products out there that do, okay? And remember, this is not an annuity presentation this morning. I'm just painting the picture of what we generally see happens unless we look at hybridization. So what happens is most of these products out there on the annuity side do not have a long-term care home health care benefit. If they do, there's usually some taxation in that. So a benefit, but yet there's also somewhat of a detriment, right? One of the things that I do see is that our advisors like to put into an annuity because the client gets all the things we talk about up here, and it's speedy turnaround time, right? So again, some of the detriments that we're going to see when we do that, and hey, we love annuities. We've been doing it for 31 years, and we do a lot of it. But there are some reasons why you might want to think of the hybridization we're going to talk about here in the next slide. One of the things is there's taxable growth. So if they take distributions from an annuity, which is, obviously we want to get growth there, we're going to pay taxes, anything over and above the cost basis. And when the client passes away, there's going to be taxes as well, anything over and above the cost basis. So you put 50,000 in, you have 100,000 when you die, there's $50,000 is taxable, right? So you make $6,000 in commission. We're going to figure about a 6%. I think that's pretty average. Sometimes there's 7, so let's, you could be making 7,000, but for today's purposes, more times than not, we're going to see a $6,000 commission. Okay, so let's look at the hybridization side. So remember, we're talking about the same person. We have a 65-year-old female. Instead of putting $100,000 into the annuity, let's put $50,000 into the annuity. Now we still have $50,000 to work with. And keep in mind, if we do that, we still have everything we talked about in the previous slide, okay, on our left-hand side of the screen. But if we did that, now instead of making $6,000, we're only going to make $3,000 in commission. So let's do this. Let's hybridize that. Let's hybridize this thing a little bit. We're going to put the $50,000 annuity. We're going to put $50,000 into single premium life. So we are still going to get tax deferred growth, right? Because it's going into a life insurance policy. In fact, it will grow tax deferred until that particular client dies. Now with the annuity, we're going to have to take a distribution sometime or another, right? The other thing is, just like the annuity, we have better than bank returns. We have products out there right now on the guaranteed side of the contract that will go up to a 3% guarantee. Tell me what bank account you're going to get. You're going to get that. Even some of the annuities today, you're going to get a 3% guarantee. Generally speaking, more times than not, it's about a 2% guarantee based on the number one selling popular products out there. Not only that, but what we're getting as well is we're getting about a 6% return on a 25-year look back on the index. We do blending of, for example, a 1-year point-to-point, 1-year monthly cap, but we still have a guaranteed death benefit, and we still have a guaranteed 2% floor. The other thing about this, in this particular scenario, and I'm going to show you a sample illustration here in just a minute. When we put that $50,000 into this single premium contract, we're now getting that client $2,520 a month every single month for 36 months for long-term care. Or maybe they need someone to come take care of them. So for home health care, they've got $1,512 a month for 60 months. And I will remind you that those benefits are coming tax-free because we're accelerating the death benefit. And I'm going to show you what kind of death benefit we're going to get here in just a minute for that $50,000. The other thing about this, we generally see a 1-week turnaround time. So one of the things that I do see that agents do not want to sell a life policy, a single premium life, because they're used to speedy turnaround times with annuities. I don't want to wait for underwriting. We've got products out there, carriers out there right now. They will actually approve it right then and there on the spot. I'll talk about that here in just a minute. So taxable upon distribution. Yes, there is. So let's say, for example, your client puts $50,000 in the single premium life. They get growth over and above their cost basis, and they want to take money out. They can take a withdrawal out for one, so it is liquid, up to 10%. Or maybe they want to take a loan out. Anything over and above their cost basis is taxable. Okay, so keep that in mind because it is a modified endowment contract, just like an annuity. So it would be taxed like an annuity, so to speak. Now, here's the nice thing that's about the single premium life is when that client passes away, the tax-free death benefit's very, very important here, whereas anything over and above the cost basis of death on an annuity is taxable. Here's the difference in commission now. If you were to put $50,000 in the annuity, you get $3,000, $50,000 in the single premium life, you're going to get $4,500 in commission on that. Okay? So this is one of the benefits. Quite simply put, hybridization benefits, if you put in a single premium life, again, you get the tax-free long-term care, as I mentioned. You get the tax-free home health care benefits, and you can see what those numbers are, $2,520 for long-term care, $1,512 a month for home health care. So what happens right away is if you split that annuity in half, instead of putting it all in the annuity, 50% or 50,000 goes into the annuity, 50,000 goes into single premium life. You have an immediate increase in the estate, $41,000, okay? Because you're getting a $91,000 tax-free guaranteed death benefit regardless of what happens to the market. And you still have $50,000 in the annuity, right? So what's the difference there? You add the two together, 91,000 plus 50,000. That's quite a bit more than just the 100,000 you would have had if you put in the annuity. You're getting additional $41,000 in benefit. And here's the other thing. If you were to split it in half, you're going to make $1,500 more in commission than you would have if you put it all in the annuity. And more of our advisors are seeing that. So why is this so popular? And I'm going to give you some other statistics here to look at that makes this popular, and why, if you just ask your client a few questions, why this is such a big deal. So in this number, this top number, 1.4 trillion to be passed to the next generation, that number is actually growing. So there's more and more dollars out there that are going to be passed to the next generation. Unfortunately, a lot of that is in annuities, so it's not being passed off income tax free like it should be or could be if we put it into single premium life. Again, here's the other thing we see a lot of. There's very few companies that are actually in this market anymore for long-term care. And so the high cost of a standalone product, also the fear, if I put that money in a single premium plan, if I don't use it, I lose it, right? Not with a single premium life plan, because you've got the death benefit. And it's hassle-free. So there is no exam to put it into single premium life. All right. All you got to do is a paper application and a phone interview, and you are done. And really, if you look at it, a lot of times we're seeing that we're getting these single premium contracts issued faster than annuities today. And the top commissions, we're paying up to 15% commission on a single premium life. I mentioned guaranteed interest rates. We're going up as high as 3%. And again, there's a tax deferral. They don't have to take the money out. It grows tax free. So if you got a client, maybe has money sitting somewhere, and this is something I always like to point out, is that they got money sitting somewhere in an account that's growing. That tax burden is getting bigger and bigger every year as it continues to grow. By putting in this single premium life policy, you don't have an issue. Stop and think about those CDs out there. And I know we're all asking about CDs because we got products better than CDs, right? So as that tax burden, they get that 1099 every year, get out of a CD, put it in a single premium life, get them a higher rate of interest guaranteed, and now that's off the book, so to speak, as far as a taxable asset. It does allow both growth, safety, and tax-free benefits. So let's look real quick here. Here's an example of a single premium illustration. Now this is based on the numbers I'd showed you before. So if we put 50,000 in a single premium plan here, we've got a $91,000 guaranteed death benefit if you look over here, okay? And you'll see the money grows. And this is based on a 2% rate of growth within the contract. The alternate rate is between, obviously, the guaranteed and the non-guaranteed. And in this scenario here, we're getting about a 6% return. This is on a 25-year look back. So look what happens with our death benefit here. Based on getting a 6%, this is like running an illustration on a typical index life or maybe a universal life. You'll see that we've got a growing death benefit, right? So let's say your client lives, there's two different statistics out there. If you look at the general public, how long the average life expectancy is, that's not as long as the life expectancy of the insurable public, right? I don't know if you all have heard that or not. So let's just say, for example, your client lives to 80 years old. There's a $123,000 death benefit in there that is tax-free, okay? Something else I want to remind you about. The accelerated benefits for long-term care and home health care are based on the death benefit. So the older your client gets, the closer they are to going into a facility, the higher their payout would be for long-term care or home health care, okay? All based on the $50,000 benefit. Here's something else I like. So let's say your client puts some money into single premium life and they decide, hey, you know what? I'm really going to need income more than I thought I was. You can 1035 exchange the cash surrender value from this contract back into an annuity, which obviously then they can get, maybe set up an annuity with an income rider. But you're going to get paid a commission again if they opt to do that, if that's what they need to do. The other thing, too, is they put $50,000 in. Look at the surrender value. By the fourth policy year, actually the third policy year, your client's made whole again if they want to bail out. They're only paying taxes on $373 at that point. So keep that in mind. This contract runs all the way to age 120. So let's say your client, maybe they lived 100 years old, had $207,000 death benefit. So to give you an idea, this runs out, grows and grows, it's tax-free. So let's look at underwriting real quick. I mentioned that to you earlier. So these are simplified issues. There are no exams for these policies, which is very nice. It's like writing an annuity, and I'm telling you right now, if you can write an annuity, you're writing single premium life. I've seen this happen all the time. Um, Real quick, while I'm thinking about it, I got a guy who called in. This is probably 4 or 5 years ago. All he did was annuities, and I mentioned this to him, and he said, "Nah, I don't want to do life insurance." I said, "Give me an example of a client you have sitting out there right now with money they're never going to live on." Um, we got him to do his first case. He wrote $1.3 million in 1 year. He's an annuity only producer at the time. Now he's writing probably at least $500,000 a year on single premium life. Okay, let's go back to underwriting. Table 4 is a standard issue. So what does that mean? That means we're taking into consideration that your seniors may have had a heart attack, they may have had a stroke, may have had cancer. Okay, so we understand that there's health issues out there, and it's pretty much covered. We do have some carriers that go up to table 8. So maybe we've got a client that had cancer 2 years ago. We can take that person. They had a stroke 2 years ago. We can take that person. So I always encourage, instead of walking away from an opportunity, give me a call. Let me run it through underwriting. I'll check with my carriers. We'll find the best one for you. Here's something else that's important. We underwrite for mortality, not morbidity. So a lot of times we see cases where they're declined for long-term care, a standalone plan, or maybe one of these other carriers out there like Lincoln Money Guard. We have that product. Great long-term care alternative. We sell a bunch of that. But maybe they were declined with them. A lot of times we're able to get them covered with another one of our carriers, even though they are declined because of the morbidity side of it. They have bad arthritis or something like that. Or maybe they have another health issue that they won't qualify. So don't walk away. Give me a call. We can issue policies, believe it or not, single premium life, ages 0 to 95. All right, let's see. Quick question here. I'm going to answer this for Suba. Suba says, can you borrow money from single premium life? What is the tax impact? Yes, you can actually borrow from single premium life. So what happens is it's a last in, first out. So when you're borrowing money out, anything over and above your cost basis is considered to be taxable. So keep that in mind. It's kind of like taking money out of an annuity. Okay, let's see. And John asks, Mark, is the single premium life always for someone who doesn't need the funds? Are there no exceptions? Not necessarily. What happens is if you look at all the benefits that are out there, and I'm going to show you a slide here in a minute about the impact of long-term care and why it's worth asking that question, because I'm not going to let the cat out of the bag. But I think if someone doesn't need the funds, what else are they going to do with them? If they just leave it sit there in something like an annuity, the taxation grows as the account value grows, right? Plus, as they pass away, it's not going tax-free. There's going to be a taxable tag to that. There's going to be something along with that asset. And I've seen so many times where when they pass away, the kids get this tax burden, and that money that client thinks is going to go tax-free to the clients, they don't understand it's not all going there. That $100,000 annuity is not all going to the kids. Part of it's going to go to Uncle Sam. So why not look and see if there's somewhere else we could put it? Maybe they also want to put it into a trust product. We have these trust products out there where it's not going to get a lot of growth. They'll get 2%. They want to put it in one of these trust plans, but now it's irrevocable and they can't really touch it. So I think it's a big deal to do that. Why not, if you've got the funds, you're not going to live on it, why not pass it efficiently? Why not help the next generation a little bit? Let's see, another question. Products approved in California, Edna asks. Yes. I've got a number of great products approved in California that do have long-term care benefits, and so that's a big deal. All right, let's go to the next slide here. So why sell single premium life? These are some statistics that I've gathered from different sources, and here's one thing that I see right now. If you ask your senior clients if they're concerned about long-term care, they can probably almost immediately think of a friend of theirs or a family member of theirs that was in a facility. And so, of course, they're concerned about it. And here's some of the reasons why you should be concerned. So if you look at this is a median annual nursing home rate of $73,000 a year. Now, I know that depending on wherever you're at, it's going to be higher than that. So you're probably thinking, gosh, that's nothing compared to my area. Well, you're right, because this is the median. I had a client one time, it was costing, and this was probably 12 to 15 years ago, and his wife was in a facility. Her care was 97,000 a year, I think it was, a year to take care of her here in Nebraska. And that was chipping away at his funds real quick. And she had been in the facility for, I think, 3 years. So stop and think, that's almost $300,000 a year. And wherever you're at, if it's more than that, just imagine when your senior clients have that happen to them, you're taking away from that survivors, that other spouse's retirement, right? So I think it's important to consider covering that if we can. The average stay is 2.44 years. 79 is the average admittance into a facility. And 40% of individuals age 65 enter a facility. Those are some pretty high numbers. Now, they may not be there 2.44 years, but if they're going to go in a facility, they're usually not, if they're going to be in there less than that, chances are it might be for, something like a stroke or something like that. But a lot of folks, they pass away, unfortunately. So if you look at this as something else I think is really important. When you talk about that use it or lose it, or maybe it's not in their budget, because when your seniors retire, they've got a fixed income, right? But things keep seeming to go up on them. And so if they wait to age 65 years old, or in this case, 70, 74, $285 a month is the average premium for long-term care. If they wait that long, that's pretty pricey. And do they want to run the risk of putting the money in and then never using it for care? Here's the other thing too. If I were to take $73,000 a year times 2.44 years, your clients are going to need $178,120. That's based on averages and the medians, right? So depending on where you're at, they may need substantially more than that. So in the scenario we talked about before, if we put 50% of that money they inherited that they don't necessarily need the income for into a single premium plan, now they're going to get themselves some nice long-term care benefits. Okay, another question popped up here. Can you get single premium life for clients already in a nursing home? That is a good question, Sue, because here's what we run into. So there's a lot of those senior facilities out there. And this is kind of interesting because I've got some advisors that I work with that actually have a relationship with these, I don't know how you want to explain it, but the senior living is on one side of the parking lot and the long-term care facility is on the other. So it's kind of a sad thing. We've got a hospital here in Omaha. It's right across the street from a funeral or from a cemetery. And it seems kind of strange, but when you look at it, they've learned that if we put and this might be a good opportunity for you as far as prospecting, but if you've got a senior living facility over here, all this is apartment living. This is for the seniors that don't want to cut the grass. They want to clean, go in and clean the house all the time. They don't want to scoop the snow. They don't want to do this stuff anymore. Either they don't want to, or maybe it's a little bit difficult for them to do that. So they go and they live in the senior apartment, right? Right across the street, right across the parking lot is the facility where, I can't take care of myself anymore. I have to go in a facility. So to go back to your question, Sue, it depends. If they're actually in a nursing home, it's too late. But if they're in apartment living, and some of the cities out there, they don't have the two building structures. They don't have the parking lot that separates the two. So I've seen some where they have actual senior living and the long-term care facility in the same building. If you have a situation like that, call me, because we've been able to actually get coverage on them and say they're not really under care, but they're living in an apartment within the facility. So hopefully I've clarified that. But yeah, if you've got a situation like that, give me a call. I Googled this too just to make sure, and I asked, what is the number one reason for bankruptcy? It's medical expenses. So stop and think about this, tying this in. And it kind of goes on down the line too. It's all kind of tied into, what if your seniors have a health issue and they can't take care of themselves? They can't perform 2680Ls and they have to go in a facility. That's the number one reason why clients file for bankruptcy. So if we can help them by saying, look, your sister just passed away, you've inherited $100,000. Do you need income from this or not? If they say, I really don't, then you could put it all into single premium life, or they say, I'm not really sure, I might. Let's do this. Let's do a 50-50 split. Let's put 50% into the annuity. Let's put 50% into the single premium life contract. Now you're buying yourself a long-term care policy as well, right? If by chance we're tootling down the road and you say, you know what, I'm really concerned about my income. I'm going to need more income. 1035 that life policy into an annuity and set up an income rider or set up something for them to where they have the peace of mind knowing, yeah, now you do have something to cover the income. Who's a prospect? I get this a lot. So I thought I'd simplify this real quick to give you an idea within your block of business or when you're prospecting. Again, I mentioned to you the agent that has written $1.3 million a year when he first got started. He's the guy that says, I don't write life insurance. So he moved a bunch of his clients over that didn't need the income. And here's the thing. He's had 2 clients pass away this last year. And how nice is that to know that if 2 years ago he had not have, or 3 years ago he had not have moved some of those annuities in his single premium life, the beneficiaries would have gotten less money because it was an annuity. And now they've got a substantial amount of money that's come to them tax-free or came to them tax-free this year. Okay, so again, I kind of had a little squirrel moment there. Let's look at who a prospect is. First of all, I always say, look at those clients with qualified accounts. I see this a lot where, I always say, if you're not doing reviews with your clients, only 51%, the last I checked when I was doing some research on clients, or I'm sorry, agents that do reviews with their clients, only 51% of the agents in this industry do that. To me, that's it's discouraging because so much has changed. I mean, if you look in the last 5 years, I know some of you on here have been in this business for a long time, but look at how much has changed since you started your career when you wrote that first client. So I always say, if you're not doing it, here's the chance. Go back to your clients that are 70 years old, because this is the year they've got some things they're going to have to do. And they're all kind of squished in here in this first top 3. First of all, qualified accounts. We want to look at those first and say, hey, you got qualified accounts. You're going to have to start taking money out of them this year, right? Because that's when your RMDs are due. So what we can do is we've got contracts out there now where you can take qualified money and put it into a single premium style product. What we do, and try to keep this real simple, is they're a combo. They're linked together. You can't buy them separately. But what you're doing is you're rolling the money out of a qualified account into a single premium immediate annuity, which then funds the life insurance internally. Now, you could do that with a number of companies, and we've done this in the past before these products came about. But so what happens, you buy them together. You apply it one time. So once you get that approved, now just moving the money from a qualified account into a SPIA does not trigger a tax event. What it does is when there's that distribution. So every year, your client's going to get a distribution paid directly to the insurance contract. They don't receive a check, they don't write a check, which is very nice. And they receive a 1099 for that distribution. Okay, so that's how we can work with the qualified accounts. We also do that with accounts where there's a large amount of growth. We see these where maybe they put in $25,000 in annuity 40 years ago or whatever, and now it's worth $100,000. So there's a lot of growth there. Instead of surrendering that account, put it into single premium life, they use a plan like that. That way we can kind of disperse that taxable gain. The other thing I always say is let's talk about the free withdrawals. If you've got clients with large annuities, and you see them, $500,000, $1 million in annuities, and they're not really touching it, this is a great way for them to maybe take 10% out. 10% out of $500,000 is $50,000, right? Or $100,000, so or $1 million, I'm saying, is $100,000. So this is a way for them to get a little extra coverage, maybe offset the taxes that are due on that contract when they pass away, that annuity contract. Again, I already talked about the RMDs. Here's something I see a lot of. We'll have an advisor call us and say, yeah, I've got a client. They've just been taking the RMDs and they're sticking them in the bank. So again, that goes up to the very top point. Why don't we just look at rolling that into one of these combo plans and making their life a lot easier? Otherwise, they're sitting in the bank, lazy money, not keeping up with inflation, paying taxes on that growth every year. Here's something else we do see: underperforming policies. Maybe there's some universal life policies out there are in trouble. When I first started selling these back in the 80s, they're paying over 9%, right? Some are even 10%. They're not doing that now, so they're in trouble. And when you look at only 51% of advisors are doing reviews, ask those clients, do you have existing life insurance policies? There's been a lot of changes. I want to take a look at it here and make sure that it's not underfunded. And this is where you can call us, and what we've been doing is we roll them into a brand new UL policy or a brand new single premium life and just being done with it. Again, going back to continuous pay policies points as well. There's a lot of those policies out there, maybe taken out 30 years ago, where their clients only getting 1.5% guaranteed interest. They're on the old mortality tables, and they're still paying premiums on them. We roll those into a paid up policy, and give them some extra money to put back in their budget. I do see a lot of paid up life policies that come into. Here's an example. We'll see a $10,000, I call those old wedding policies that your clients bought 40, 50, however many years ago. They've been paid up, but now the net amount of risk is really more on the client's shoulders because they got a $10,000 policy with $8,000 in cash in there. And when they die, they get $10,000, right? So what we look at doing is let's look and see what the surrender value is in that account, and we roll it into a brand new single premium policy with a higher interest rate, lower mortality tables or rates, and they also have long-term care benefits. So I always say when you're doing a review with your client or you're sitting down with them, do you have existing life insurance policies? Let's take this into consideration. I'm an advisor. I'm going to look, we're going to make sure that everything is in your best interest. I see a lot of agents have passed away and they're orphans now, right? So they're not being taken care of. Underperforming CDs, excess checking or savings accounts. When I was in the field, I was surprised when I would ask clients how much money they have in the bank. I had a client at $1 million in their savings account. It was FDIC insured, they said, okay? So they felt good about it. I had $800,000 in a checking account, $500,000 in a checking account, just because they like it. It's FDIC insured, they think, but it's not really a good thing for them, right? So as I mentioned, we put in these policies, they can take loans, they can take withdrawals, and it provides them some great shelter. I already mentioned clients decline for long-term care. So if you're writing those standalone plans, if you've written some of these single premium life plans with these carriers that underwrite for morbidity and mortality, they may get declined because of a health condition under one of those contracts, give me a call because we have been able to place quite a few of those. Okay. With that said, that wraps it up. If you have any questions, go ahead and type those in the question box. I'll go ahead and address those for you. And as I mentioned, if you're interested in IAMS Wealth Management or our Academy, or maybe anything else we covered, you can certainly give me a call here and I'll address that with you. But I certainly hope this was beneficial for you. I think the one thing is that when we talk to a lot of our advisors out there, they do not realize that such a product even exists. And I tell you, if you're on here this morning and you didn't realize that these particular plans existed, you can pretty much rest assured that your clients have no clue. And they are concerned. Ask them if they're concerned about long-term care. In fact, I've got fact finders. If you want to mail to your clients, we have some agents that'll do that. They'll mail a form and then they'll fill it out and then they'll go back and they'll sit down and they'll go through it with them. Or maybe you've been somewhat one-dimensional. Maybe you're just selling one product line and you're not asking a lot of these questions. You don't know where your clients' assets are at and things like that. I do have some forms that are very helpful for that. So I would encourage you to give me a call. I can get those over to you. Of course, some of these things we're gonna want you to be appointed first, because last thing we want to do is provide you a bunch of stuff and then never allow us the opportunity to earn your business. That's what we want to do. We want to work with you. And I will tell you that I'm going to give you a call here after this webinar. I'll send you out the recording. And but the whole idea behind me calling, just to see what your thoughts are, if you think there's maybe a client or multiple clients out there that we can help. The hardest thing is getting started, but I tell you what, it's a lot easier than you think it is. We're creatures of habit, so it's pretty easy for us to get excited about something like this, but then whether or not we actually put it into practice, I can make it easy for you. And I will tell you, I have been on a lot of appointments, not physically with your clients, but I've had many agents and advisors call me and put me on speakerphone, and I just sit there until a question is asked of me, and then I address it. I've had them call me and say, we've got this policy here, or we've got this amount of money here. Here's their health. I'll put them on hold, call the company real quick, make sure. A lot of times I can just tell you if they're going to get approved or not. But I can run the illustrations right there while you're with your client or while you're with your prospect. And then I can email an application over. And we've had deals come together just as quick as you can make a phone call. So keep that in mind. If I can help, again, the first one's usually the most difficult, but if you're selling annuities, I also do a webinar on single premium life versus annuities. I think we even have a recording out there on our single premium life page, and it talks about that. They're so similar that there really, in my opinion, is no reason for you not to be able to do it. It's not that difficult to do if you're selling index annuities as well, because some of our most popular single premium plans are index life. But keep in mind, they are guaranteed. I think there's a lot of that where I think we're used to selling annuities and there's not a lot of guarantees in there, but these are guaranteed. They basically sit on a whole life chassis. You've got a guaranteed death benefit and a guaranteed interest rate. So keep that in mind. All right, my question box is empty. So at this point, what I'm going to do is I'm going to, once again, thank you for taking time here. I know that you want to do right by your clients, and this is a good opportunity to help them. And I would encourage you to keep your eye open for your email from me. If you do not see an email from me, it's going to say probably something like Friday's recorded SPL webinar. If you don't see that, check your spam folder, because that does happen. We send out a lot of emails, and certain ones like Gmails and things like that, they automatically put us in the spam or the trash folder. So keep that in mind, and then expect my phone call, because I want to visit with you. I want to see what I can do to help you. Okay, with that said, have yourself a great weekend, and I do look forward to speaking with you here. If not today, it'll be early next week. All right, thank you much.